Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Kwani. Good evening. Today is Wednesday, November 12th. I'm analyst Yang Qida. Remember to like, subscribe, and share for us, okay? If you have any investment questions, feel free to leave me a comment. If there's anything you're not satisfied with today, I'll make sure to add more details in tomorrow's class. As usual, I'll also be answering students' questions today. All right, let's have some fun. Hi everyone, I just saw a few students greeting us online, like Hui Juan, Alice Fu, and also Ni Mei Daizia. Good evening to you all. And Kei Coco Lee and Yu Ye Who's Flying. Good evening to you too. All right, first, let's take a look at today's investment focus. Actually, this week, there haven't really been any major economic data releases in the first 3 days. If the US government does officially reopen smoothly, then maybe the more important data will come out on Thursday and Friday. I'll walk you through data like CPI, PPI, and so on, as well as the monthly retail sales figures. So from Monday to today, Wednesday, there really hasn't been much important data released. But everyone should still pay special attention to important events. The first focus is on the continued weakness in employment. Wells Fargo has issued a warning. Due to the US government shutdown, we haven't seen the non-farm payroll numbers for September and October, and of course, the unemployment rate data has also come to a halt. There's no related data. However, in the private sector, the ADP data company has only released the so-called small non-farm payroll data. So what exactly does this newly released ADP small non-farm data show? Now, it also includes a new weekly data set. What kind of information do these high-frequency weekly releases provide? Also, what specific warnings did Wells Fargo mention regarding the US stock market? Including their views on US stock valuations and the situation with tech stocks, what exactly did they mention that everyone should pay special attention to? In addition, on the industry side, I think the whole market is now focused on one thing, which is SoftBank under Masayoshi Son, that is, Japan SoftBank. So what about SoftBank? They announced that in October, they had already sold off all of their Nvidia shares at full speed, completely, not a single share left. Did Masayoshi Son see some weakness in Nvidia, or did he have concerns about the overall development of AI? Why did he decide to sell all of Nvidia's stock? In this situation, besides Nvidia, should we also be worried about other AI-related stocks? And today, coincidentally, in the comments section, there was a student, seems like a regular, who asked about this as well. They asked some related questions, so today I'll spend a bit of time discussing this with everyone. Specifically, I'll talk about how to analyze SoftBank's complete sell-off of Nvidia. In addition, AI-related stocks have continued to show some weakness. Not just now, but the market sometimes has concerns about these cash-burning companies, and there are a lot of them. This includes the Magnificent Seven, many of whom have significantly increased their capital expenditures. The question is, can they really earn back this cash flow? Even companies like Oracle and Meta have taken on a lot of debt. So does this borrowing and financing activity create cost pressures? So in tonight's program, I'll go through all of this with everyone one by one. All right, good evening everyone, and good evening to Banana Shang. And who is this? This is A. Airwinching 888, good evening, good evening. Okay, let's first answer the question from an investor friend yesterday. Some of you left messages on the message board or in the chat room. Just so you know, I read every single one of your messages. After the show, I go through every single one, really. Sometimes you all chat or leave questions, whatever it is, I see it all. If I don't have time to answer something today, I'll make sure to respond to everyone in class the next day. Also, just a quick reminder, a few days ago, I did a little survey with everyone. So I asked everyone during this wintertime about our Kuning evening show. If it airs at 9 p.m., do you prefer it at 8 p.m. or 9 p.m.? Most of you said you'd rather have it at 8 p.m. Of course, I've already passed your feedback on to the company for evaluation. The company really respects everyone's opinions, but there's a pretty big issue. Because it's wintertime now, there are a lot of important economic data releases. For example, things like non-farm payrolls, CPI, PPI, or PCE. These data releases just happen to be announced at 9 p.m. in the evening, like with non-farm payrolls, so the company also considered that some important high-frequency data, those that are crucial every month, are released at 9:30 p.m. during wintertime. That's why they hope that our Kuanying evening show can take this into account, so we can provide timely analysis for everyone. That means, during wintertime, everyone will have to work a bit harder. For now, the show will stay at 8 o'clock during daylight saving time, but in wintertime, like now, from November to March of the following year, it will start at 9 p.m. So everything is pushed back by an hour, and you can listen to Mr. Zhang talk about stocks while having a late night snack. That's pretty much how it'll be. All right, that answers the first question. Now, for the second one, I want to apologize to everyone. Sorry about this. It's just that, well, this week there's no live podcast. Next week, as usual, I, Mr. Zhang, typically do a live stream every other week. On the off weeks, I work the day shift, so I go to branch offices to give talks about Taiwan stocks and US stocks. So next week, I was actually supposed to go to a branch office to give a talk. As it happens, next week, the Chiayi branch had originally invited me to give a talk on the 17th. It turns out that next week, I have too many unused vacation days, so I won't be in Taipei. I'm taking my annual leave, 7 days off to relax and unwind, since I still have 10 days left. It's a shame. I'll have to wait for another chance to serve friends in central and southern Taiwan, including next week's event in Chiayi. Also, in mid-December, there was supposed to be a US stock seminar in Kohyung that I was invited to. And it just so happens that I'll be going abroad too, so I'll be out of the country and miss everything. So I feel a bit sorry for friends in central and southern Taiwan. Maybe next year I'll be able to find time to do these seminars for everyone. Otherwise, honestly, I haven't even been to our Chiayi branch office yet. I haven't been to Chiayi yet, but back when I was still in school, I used to go there a lot because I studied at National Chengcheng University, so I often went to Chiayi. Chiayi is actually a pretty unique place, so if there's a chance in the future, I'd love to chat more with everyone about it. Anyway, to sum it up, well, that's about it. Before the end of the year, I need to use up my vacation days. I have to take them soon, so I won't be able to serve the branch office for a while. No matter what happens, this year or next, we'll still be here with you on the Good Night program or at the branch office, leading everyone. Whether you're facing the Taiwan or US stock market, I hope everyone becomes steadier on their investment journey. If you have investment questions, feel free to leave me a message. We'll do our best to respond to everyone. First, let me answer the first question from a student. Yesterday, who was it? Oh, right, Gao Ziron. Gao Ziron asked whether we should be worried about Nvidia's and SoftBank's initial investments. I'll spend a bit more time analyzing this for everyone in a moment. Also, Caesar asked about RGTI, a quantum computer-related concept stock, and how we should view it. Let me briefly add that quantum computers are considered a conceptual type of stock. Currently, the mainstream market focus is still on AI-related industries and individual stocks. Of course, in AI, whether it's GPUs, servers, cooling systems, or even moving toward robotics, AI robots, or general AI like AGI, all of these areas are developing. That's right, and even companies like Nvidia and AMD are advancing in this space. At present, this is still the most important mainstream trend, but in the future, as the demand for faster and faster computing increases, there's a chance that development may gradually shift toward quantum computers. For example, companies like Google, IBM, and even Nvidia are slowly getting involved in the development of quantum computers or quantum chips. Microsoft is also working on quantum chips. However, this area is nowhere near as vibrant and active as the current AI sector. So, in the future, quantum computers might have a place in the market, but in the short term, that's not the case. So right now, it's more of a speculative topic, or something that gets hyped up by news. Since that's the case, aside from the news and hype, it's really important to look at its revenue and profitability. So what about this IRG or RGTI? As for the company, it just announced its Q3 revenue today, which was $1.95 million, falling short of expectations. The EPS also showed a loss of 62 cents. In the short term, the stock has dropped all the way from $60 down to $31, basically cut in half. This kind of speculative play, like the hype around quantum computers, once it goes up, it can come right back down just as quickly, especially since its revenue, profits, and market position. Market acceptance isn't there yet. It's not as strong as for AI. For now, rely on technical analysis to trade this stock. In the short term, if someone like Kaiser buys RGTI, watch the 50-day moving average. As for the 50-day moving average, right now it has been broken in the short term, so if it drops below that line, ideally it should bounce back above it within 2 or 3 days. Otherwise, the short-term pressure will keep pushing it lower, and this kind of slow downward trend isn't great for the stock price. Of course, when you're trading companies in the quantum computing sector like this, my suggestion would be, since these stocks are more volatile and carry higher risks, it's best to take profits when you have them. Get in and out quickly. If you're a more conservative investor, it's better to focus on the AI sector, where the risks are relatively lower. Or you could wait for companies like Microsoft, for example. When companies like IBM and Google, for example, are actively advancing their technology and making strategic moves in quantum computers or quantum chips, that's when we can shift our focus to these tech giants. This way, the balance between risk and reward in our investments might be more even. All right, that answers Caesar's question. Also, since there aren't any major economic data releases tonight, I'll give everyone a brief update on some events. As for economic data, like I just mentioned, the economic data coming out tomorrow and the day after will be more important. These will be the key ones to watch. All right, Melissa, good night. And also Amita, is it 8486? Good evening. Okay, welcome, teacher. Enjoy your vacation in New York, thank you. If I get a chance to go to New York, I will. Also, H3X, good evening. Okay, actually, everyone is working really hard on the analysis because it's all to provide you with the most up-to-date economic data. So you're the same, staying with us at 9 o'clock to watch the market together, right? I'm doing the live stream here at the office, and you're also tuning in online, constantly listening to the stream. You're working hard too, aren't you? Some of you might even have to take care of kids and go to work the next day. So to make our investment journey more stable and successful, we all have to put in a bit more effort, right? Okay. Also, let me add a bit about the economic data. The ADP, this private payroll data company, normally, ADP releases its data every month. Just remember, it's always on the Wednesday of the first week of each month. On that Wednesday, they usually announce the ADP private payroll numbers. Then, on the Friday of the same week, the US Department of Labor releases the official non-farm payroll and unemployment rate. So one is from the government and the other is from a private company. Just remember, the Wednesday and Friday of the first week of every month are especially important. Now, since the non-farm payroll and unemployment rate data that are usually released on Fridays haven't been published yet because the government is shut down, the ADP data is playing more of a supporting role right now. So besides being released on the first Wednesday of every month, this week's ADP data also mentioned that for the 4 weeks ending October 25th, on average, the private sector reduced about 111,200 jobs per week. At the same time, Goldman Sachs also estimated that non-farm payrolls in October might decrease by 50,000 jobs. So in any case, that's quite a significant reduction, whether you look at the weekly or monthly data. Anyway, it's all decreasing. In fact, Goldman Sachs even believes that this drop in non-farm payrolls could be the largest decline since 2020. But really, this only shows one thing. It only represents one thing. Whether it's the state-level data telling you there's a decline of 11,000 jobs per week, if you add that up over 4 weeks in a month, then according to ADP's data, maybe the monthly decrease rate from ADP would be about that. For the current month, it might be a decrease of 45,000 jobs. Goldman Sachs is estimating that the official non-farm payrolls could drop by 50,000, around the 50,000 mark. No matter how much it decreases, whether it's 45,000 or 50,000, it all points to one thing. The US job market is indeed continuing to weaken. It's staying weak. But even though it's weak, it hasn't turned into a massive so-called market crash or a complete collapse of the job market. There's no complete recession either. At most, it's just showing signs of cooling off. So at most, it's a cooling trend. Of course, this can't go on for too long. If it lasts too long, it could mean the economy will start heading toward a recession. It can be short-term, maybe a week or two, or even a month or two, and that's still controllable. But it can't keep declining for long, because if employee numbers keep dropping for a long period, what does that mean? It means the company's revenue or profits are having issues, and they might be laying people off. Or it could be that AI's capabilities are extremely powerful, so it has replaced a lot of people, meaning a lot of jobs have been taken over. So what does that lead to? Or, for example, government layoffs or layoffs in private companies, these all cause the overall non-farm or ADP employment numbers to drop when a lot of people are unemployed in this situation. Just think about it. If any of us lost our jobs today, whether it's you, me, or someone else, after losing your job, you have no work and no income. That means you'll cut back on spending, reduce your consumption, and the economy will have a hard time functioning. In that case, it's tough for companies to grow their revenue, profits, or product sales, and their consumer spending can't go up because you basically have no income, you might have been laid off, so this is all interconnected. When a lot of people are unemployed, it means consumer spending will go down. When consumer spending drops, the economy cools off. So there's a very direct relationship here. When you look at unemployment rate figures, you might first notice them going up or down and watch them. But if, over time, they keep rising and the number of employed people keeps falling, this can lead to an economic recession in terms of GDP and jobs. So pay close attention to these trends. But as for this Friday, let me talk to everyone about whether this Friday they'll actually announce the non-farm payroll data for September or for October. Honestly, I think, well, the past is the past. Whether they announce September's or October's data now, to be honest, it doesn't really have much of an impact on the overall market anymore. Oh, because data has its own timeliness. You have to remember that. Also, things like the news from the US Federal Budget Committee, just take a look at it and move on. And then, what else? Didn't Trump impose a lot of tariffs during the trade war? All the countries collected a lot of tariff revenue. Now, the tariff revenue is about $300 billion. He said that after collecting these tariffs, the idea was to return them to the people. Kind of like what we do in Taiwan now. If the government collects too much tax, collects a lot, then they want to issue things like consumer vouchers or just give out cash. Or they return vouchers or cash directly to the people. For example, recently, didn't they say that on November 17th or something, we can just go to the ATM and directly withdraw that $10,000 as a reward, get back that spending amount, something like that? It's a similar situation. So the US also wants to do this, but if they do, the budget committee says that just doing this alone could make the total cost reach as high as $600 billion. So basically, it's just not enough to cover the expenses, and it might not be a good thing. So Becerra, Treasury Secretary Becerra, said, all right, so the $2,000 per person, this dividend might end up being presented as a tax cut instead. But honestly, this is just something to listen to or glance at. Don't take it too seriously. Whether or not this will actually be implemented is still very, very uncertain. So why are they talking about giving back $2,000 in taxes, whether as a dividend or a tax cut? Why? Because I think at that level, it's really about sending a message to the Supreme Court justices saying, look, we've taxed so much in the end. The idea is to return taxes or give cash back to the people, which is generally seen as a good thing for the public. Otherwise, with all the taxes they originally collected, the plan was to use it for government spending, government operations, national defense, all sorts of things. They never intended from the start to collect extra taxes and then give them back to the people. So I think this is just a tactic to win favor with the Supreme Court, that's all. So just listen and take it with a grain of salt. Overall, I think whether or not they'll actually issue tax refunds, it's really just about the US, not Taiwan. Whether these tax refunds help the economy is debatable. $2,000 is about 60,000 new Taiwan dollars. Will this amount really make a big difference to the US economy or consumer spending? Is the US economy going to see a huge boost just because people have an extra 60,000 new Taiwan dollars? Not really. So in my opinion, this $2,000 is just Saba, it's basically like pocket money. It's more symbolic than it is substantial. That's pretty much the idea. Okay, Canlin, good evening, Kenny, good evening. Now, let's take a look at Hassett, the economic advisor. Pay a bit of attention to Hassett because he might be one of the candidates for the next Federal Reserve chair. He said that the government shutdown would drag down GDP by 1% to 1.5%. But he predicts that in the first quarter of next year, growth could bounce back to 3% to 4%. So will the government reopen next year? Basically, it should reopen next year because right now it looks like at the earliest, maybe as soon as tomorrow morning, the House of Representatives will vote on the temporary funding bill. At the moment, it seems like the vote will pass since after the Senate passed it, now it's the House's turn. If the House passes it too, then it will be handed over to Trump will sign it, meaning he'll do the signing, then the US government will reopen. After reopening, what about funding? It's estimated to last until the end of January next year. As long as the government is open, reopening solves many problems. When open, the economy operates normally. Kazakhstan has said that in January next year, in the first quarter, the economy should return to this upward growth trend. Lastly, I want to mention that when these officials make statements, or when we talk about things like the ADP report, all of this, we can reasonably predict these things. Like what? For example, the job market is declining and there are issues like tax refunds, the $2,000 stimulus, and the government shutting down or reopening. All of these are still okay. Their impact on the economy and stock market is controllable. If the government reopens, that's good for the stock market, right? But then there's Wells Fargo. Command, good evening. Wells Fargo gave a somewhat cautionary warning today, and that's something we need to be a bit careful about. I think what Wells Fargo said is something you should keep in mind for now. They said they downgraded, hey Jeff, good evening. They said they downgraded S&P information technology stocks from outperform to neutral. They believe that tech stock valuations have risen too high, the ecosystem is overvalued, and the market is overly optimistic. Although they said, he thinks that although by 2026, many of these tech companies will have increased their capital expenditures significantly, and of course with higher capital spending, it will impact their stock prices, operations, and even their revenue, profits, and order intake. It'll be a big help, that's for sure. But he believes that at this stage, because valuations are too high and everyone is overly optimistic, the best strategy right now is to take some profits. The funds should be shifted toward more defensive companies, such as utilities. For example, industrial stocks or financial stocks. He thinks that since AI-related stocks have significantly increased their spending in the third quarter, as we can see from their financial reports, companies like Meta, Microsoft, Google, and many others like Amazon are all ramping up their capital expenditures. However, investors are concerned about such large-scale spending. People are starting to question whether free cash flow, or FCF, can really recover as expected. There are even growing concerns about debt financing. So this is actually quite an interesting topic to discuss. Looking at Wells Fargo right now, you can see that the number of tech stocks is much lower, and the cost of financing is also very high. But even so, many companies currently don't have positive cash flow. For example, OpenAI still hasn't turned a profit so far, even though they claim their annual revenue could reach $10 or $20 billion, and that's a huge amount, but their costs and losses are even higher. So right now, they still don't have positive cash flow, nor are they profitable. There's no net profit at all. So given that, but everyone is still burning through cash and constantly increasing capital expenditures, what should be done about all this? Let me tell you, this kind of situation isn't going to end anytime soon. It's all about staying competitive in the AI race. These CSP operators, these tech giants, they absolutely have to invest even more cash and keep pouring money in. Even if they see that they can't make money in the short term, maybe for 1, 2, or even 3 years they're just burning cash, they still have to keep spending. Why? Because if you don't burn cash, you'll just get left behind by others. If others overtake you, your competitive position might get carved up. So this is a very real situation. Now you might ask, teacher, with all this money being burned, is this going to turn into a bubble? That Ponzi scheme, well, as I've mentioned before, a bubble probably won't happen in the short term, not just yet. But when should you start to worry? You need to be cautious when you start seeing these so-called AI perpetual motion machines. For example, NVIDIA invests in OpenAI, OpenAI invests in MDA, and then maybe MDA turns around and invests in, say, Oracle or some other company. Then Oracle goes and buys NVIDIA's chips, and so on. This cycle just keeps going, one link after another. If any one of these companies suddenly runs into cash flow problems, or their funding chain breaks, or there are doubts about their cash flow, then this so-called perpetual motion machine breaks down. Once the funding chain snaps, it triggers a domino effect when it comes time to repay debts. When that happens, everyone will just try to run away as fast as they can, and that's when you get what we call a black swan event. Everything just collapses all at once, and the whole chain blows up. But right now, that hasn't happened yet. For now, everyone is still working hard to burn through cash and buy as many chips as they can. That's basically the idea. So the concerns raised by Wells Fargo are something I think you should keep in mind. Keep them in mind and maintain a sense of crisis. It's absolutely right to be aware of the high risks involved, but is it happening right now or about to happen soon? No, it's not. As for when it will happen, nobody knows. But will it happen? Yes, it will. It will definitely happen someday, just not in the short term. As I mentioned, this will eventually happen, specifically when funding breaks. As the industry shifts from growth to maturity and companies keep burning cash, investing more, after 3 or 5 years of pouring in money, these companies will realize that the more they invest, when they realize that the money really can't be earned back, serious doubts will arise. And even as the AI industry shifts from the growth phase to the mature phase, when more and more people are using AI, the cost of AI keeps dropping, and its use becomes increasingly widespread, at that point, these companies can no longer make large-scale capital investments, because by then AI will already be a mature sector and a mature industry. And of course, once it reaches maturity, you know that during the growth phase, profit margins might have been, for example, like NVIDIA's. Profit margins could be as high as 70%, 80%, or even 90%, very high, over 80%. But when it enters the mature stage, the profit margin might drop, maybe down to 30% or 40%, it will decrease. At that point, the market's price valuations will definitely be adjusted, but that's something to talk about in the future, not right now. So regarding this cluster from Wells Fargo, I think it's something to keep in mind, but in the short term, it hasn't happened yet, but you need to stay cautious when things are at a high point. Always keep this in mind and be prepared. For example, yesterday someone mentioned the chain reaction fire, right? The chain reaction fire? The chain reaction fire? What story is that from? That's the Battle of Red Cliffs, right? Yes, from the Three Kingdoms, the one with the chain reaction fire. Do you know why they set fire to the chained ships? Why did they link those ships together? You know, right? In Romance of the Three Kingdoms, it says they chained all of Cao Cao's navy ships together because his navy was huge, really massive. But because the waves were pretty rough, and at that time there were some schemes of sowing discord, these schemes involved some spies going over to Cao's strategists or advisors and telling them how to defend against this so-called threat. The thing is, Cao's navy wasn't very good on the water. His soldiers often got seasick. They were prone to getting seasick because they weren't good at naval battles. They might have been really strong on land, but when it came to fighting on water, they just weren't as skilled. So whenever there was a naval battle and the waves weren't even that big, they'd still get seasick, right? So someone gave Cao a piece of advice, saying, if you want your soldiers to stop getting seasick and stay energetic, it's simple. Just tie all your warships together. If you tie them together, instead of each ship rocking up and down with the waves on its own, once they're all connected, even if the waves are big, the whole thing becomes more stable because the surface area is much larger. It actually became more stable, much more stable. So Cao believed it and thought, wow, yeah, if we tie them all together, the soldiers won't get seasick. And sure enough, once the ships were tied together, no one got seasick. But because they were all connected, there was a new problem. You know, once everything is linked together, just like what the previous speaker mentioned, it's like our current AI perpetual motion machine. Everything is interconnected. The industry and the trend might seem very stable, but if a single spark sets it off, if one ship catches fire, just one, the whole fleet, all the connected warships will burn. This was the strategy in the Romance of the Three Kingdoms, the fire attack on chained ships. That's how Cao's army was crushed. The idea was to help soldiers avoid seasickness, and someone suggested it, but in reality, it was a plot against him. They really did chain all the ships together, and with just one spark, the entire fleet was wiped out. So, of course, we hope that in the future, the perpetual motion machine of AI won't end up like the chained ships going up in flames. Otherwise, things will get a lot tougher down the line, and it'll be exhausting. Alright, as for Zhou Yu beating Huang Gai, honestly, I forgot what that story was about too. It's been so long since I last read it. Okay, moving on. Besides the economic data, let's look at some industry news. The US 10-year Treasury yield has reached 4.08, and the terminal rate is holding around 3.7. It looks like there probably won't be any more rate cuts this year, especially in December. It seems like things will just stay as they are. As for the story of borrowing arrows with straw boats, I think that's not actually from the story, but from another one. It's the one with Zhuge Kongming. That one is related to Zhao Yu and the straw boat borrowing arrows story. I think it was Zhuge Liang and Zhao Yu making a bet, right? The bet was something like, if you can't borrow that many arrows, you'll have to face military punishment. So this story is about Zhuge Liang and Zhao Yu. Anyway, a long time ago, I remember that back in junior high or high school textbooks, they talked about this kind of thing, right? As for the interest rate cut policy, it's now at 0.6 times, which still means there's room for less than one rate cut. So it looks like in December, the probability of rates remaining unchanged is quite high. The US dollar index saw a slight increase of 0.0%, and it's still fluctuating between the 20-day and 50-day moving averages. Now, regarding geopolitical risks, Russia's foreign minister said that if the US resumes a summit between Trump and Putin, then Russia is willing to participate in the preparations. But honestly, I think this is just talk. After all, that's how it always is between the US and Russia. One moment they say they want to talk, the next they say they don't. If Putin doesn't cooperate, Trump gets mad and says, I'm not talking to you anymore. I won't talk to you in the future. Or if a missile flies over, or if Ukraine or Russia doesn't agree to a ceasefire and Trump isn't happy about it, he'll say, fine, then I won't talk to Zelensky, and I won't talk to Russia either. That's pretty much how it goes. As for when they'll actually talk, well, I'll just keep watching. It probably won't happen anytime soon, maybe after the election. There are just too many variables right now. So looking at the bigger picture, the price of New York crude oil is still showing a rather weak trend. Geopolitical risks aren't really supporting oil prices at the moment, so today it dropped another 0.57%. Overall, the market is still leaning bearish. Gold is still leaning bullish, while crude oil remains more on the bearish side. Basically, these are the two main commodities you should have a general idea about. As for economic data, there might not be time to cover it tonight. The OPEC monthly report is expected to be released around 8 o'clock or 8:30, and I'll help share that information when it's out. If I have time tomorrow, I'll give you all an update. Tomorrow, the EIA and IIA monthly reports will also be released, so if I have time, I'll track all three major oil reports for you. Also, in the next couple of days, we'll have the CPI and PPI coming out as well. If the monthly sales rate is released, we'll also analyze it together around 9:30 in the evening. As for earnings reports, it's pretty much the same. There aren't really any major earnings reports this week. Maybe today there's Infineon and Glencore, and tomorrow Cisco and Disney. These don't really have much impact or shock on the market or trading. At most, Applied Materials on November 14th is relatively important. Basically, all the key earnings reports will have been released by mid-November. The most important ones are probably in the early morning of November 20th, Walmart's and Nvidia's earnings reports, so keep an eye on those. By the end of November, just pay attention to Dell and HPQ's earnings reports, and that should be enough. Alright, now let's take a look at some industry news, which is quite important. I'll try to go through this a bit faster so that when everyone tunes in at 9 o'clock, you won't have to stay up too late for the show. After all, it's already pretty late at 9, and the weather's getting cold. It's not like we're just telling some historical stories or listening to the teacher talk for no reason. So as we chat, if you feel like it, you can always come back and listen tomorrow or whenever you have time. I'll come back and share some other things with everyone. If I have time, I'll talk about them tomorrow, depending on my schedule. Yeah, there's no need to announce the old stuff, just release the latest updates. That's right, that's the way to do it. I think so too. Actually, there are a lot of economic data points, but some of the older data is like that. Right now, some of the data is a bit awkward because some of it is from the past. Okay, it had to be compiled a month ago, or 2 weeks ago, or even 3 weeks ago. But because the government shut down, they couldn't compile the data. If they can't compile it, then after a month, where are you supposed to find data from 3 or 4 weeks ago? You just can't. Once it's in the past, it's gone. You simply can't find that material anymore. So that stuff might never be released, because the data only existed at that moment. If no one collected or recorded it at the time, there's just no way to compile the statistics later on. So I still want to suggest to everyone that in the coming days or even weeks, when the US government reopens, there will probably be a flood of data coming in all at once. Some of it will be the most recent and up to date, while some might be from as far back as September or even October. I would suggest that for the data from September and October, you can just take a look at it and view it neutrally, since it's not that important anymore. It's already in the past. What you should focus on is the latest information released in November. But for those previously unreleased or just now released data, you should still use them as a reference. What I'm saying is, the most important thing is to check the latest information. That's the best way. Now, about SoftBank, I also hope to keep track of time and finish work earlier. We have half an hour left, so hopefully we can finish in 40 minutes. Sometimes there's too much data. Now, about SoftBank, let's move to the second point. According to Kaijing, their net profit is 2.5 trillion yen, which beat expectations, so that's the situation. Basically, the fundamentals are incredibly strong. With a profit of 2.5 trillion yen, everyone is definitely interested. Out of that 2.5 trillion yen in profit, their investment in OpenAI actually brought in 2.16 trillion yen in gains, which is a huge amount. But keep in mind, these are unrealized gains. What about October? He said they liquidated their holdings, cashing out 5.8 billion US dollars. When they sold, they didn't just sell a portion, they sold everything. They also disposed of $9.2 billion worth of T-Mobile stock. Additionally, they used AI-related stocks as collateral for loans. Altogether, they were raising funds and bringing in a lot of money. So what did they do with all that money? After selling off T-Mobile and those other companies, what was the purpose of getting all that cash? Well, in December, they turned around and invested it in OpenAI, putting in another $22 to $22.5 billion, basically doubling down on OpenAI's restructuring. So how should we look at this? Does SoftBank selling off all its Nvidia stock mean they're not optimistic about Nvidia anymore? Does it mean Nvidia's done for? Or does it mean they don't have confidence in the industry as a whole? Not necessarily. That's not exactly the case. If SoftBank really wasn't optimistic, then basically, after raising that $22.5 billion, they wouldn't have reinvested it into OpenAI. Don't forget, like I mentioned earlier, OpenAI helped SoftBank earn 2.16 trillion yen, a huge amount. Converted to US dollars, that's about $16.7 billion. So that's an extremely large profit. If he wasn't optimistic about AI, he wouldn't have invested the money. Now, you might ask, will not answering questions about selling OpenAI cause some doubts in the market? More or less, yes. I can only say that, to some extent, there will be concerns about the stock. From a technical perspective, people will have doubts and say, hey, since you were optimistic about AI and involved from the beginning, whether it was at the GTC conference or another meeting, even Masayoshi Son hugged Jensen Huang and said, I sold your stock too soon. It was a $4 billion investment, and he made $7 billion in profit when he exited. But if he hadn't sold then, how much could he have made now? He could have made 70 times that, about $250 billion. So of course, it hurts. He missed out on a huge profit. So back then, he still hugged Jensen Huang, but why did he sell everything now? Of course, what he means is that he cashed out all that money to invest in OpenAI, okay? It's not that he has a negative outlook on NVIDIA, at least that's what his story is. Honestly, I think there's something fishy about this, whether from a practical view or the shareholding structure. What do I mean by fishy? He's not bullish, but not bearish either. Not on NVIDIA, not on AI. One thing is certain, for now, he still sees AI investment as a sure thing. Still, it feels like there will be some short-term impact on NVIDIA's stock price or on positive sentiment toward NVIDIA. Why? For example, look at the Taiwan stock market now. It's not strong, but DRAM stocks like Nanya Technology and Winbond have surged, right? Both make DRAM, DDR4, DDR5, and so on, these kinds of companies. Especially in the DDR4 sector, prices have often surged, and the hype around price increases has been huge. Now, imagine if today Warren Buffett, the Oracle of Omaha, suddenly told you, I currently hold both Nanya Technology and Winbond, but I'm especially optimistic about Nanya's future growth potential, so I'm going to sell all my Winbond shares and use all that money to invest in Nanya. I see Nanya Technology as about to skyrocket, but selling Winbond doesn't mean I'm not optimistic about Winbond. It's just that I believe Nanya will yield even higher returns, so I'm putting all my money into Nanya. So what will the market think at this point? The market won't care that Buffett said he sold off Winbond? It's not that I think Winbond is bad. The market will wonder if you're optimistic about both Winbond and Nanya, and you're bullish on the whole DRAM industry, then why would you sell off all your Winbond shares to buy Nanya? Isn't that kind of strange? Even if you say it's just a matter of portfolio allocation, or you're just making some adjustments and so on. But the fact is, you sold off Winbond and you cleared out your position. That's just the reality. It's like when Masayoshi Son liquidated his holdings. That's a fact. So what exactly did Masayoshi Son see? Of course he's optimistic about AI, but why did he feel the need to cash out so much? And then go all in on OpenAI? Oh, this is something everyone can really think about going forward. Is there something about NVIDIA that we haven't seen yet? Why is that? Why is it betting so heavily on OpenAI instead of, say, using all of the $9.2 billion from the sale or even the loans elsewhere? Why go all in on NVIDIA? You get what I mean? So in the short term, there will be some situations where people can't quite figure out the boundaries. I think we'll just have to keep watching how things play out. As for the stock side of things, why did it peak in October? Back in October, the stock price was nearly $200, $210, $220, and that's when he made his move. He sold at the very top, almost at the highest point. That's really impressive. So I think when it comes to news and stock positions, these factors will more or less affect NVIDIA's stock price in the short term. There will be some volatility with ups and downs, but in the long term, NVIDIA remains a leader in the industry. 80 to 90% still rely on NVIDIA's chips, so there's no long-term concern now. In the short term, stock positions, technicals, and news may cause volatility. As for the rest, why did Masayoshi Son decide to sell off everything and not keep even a little? What was the reason? We don't know yet. If there's any news about it in the future, I'll let everyone know. So yesterday, NVIDIA dropped 3%, but it's still okay. It's at least holding above the monthly and quarterly moving averages, so for now, it's still relatively stable. As for AMD, today's outlook is generally more positive. You've probably seen a lot of optimistic takes from this morning to tonight all over the internet. Regarding AMD's news, they said that over the next 5 years, under Dr. Lisa Su's leadership, annual revenue growth could reach as high as 35%. That's 35% growth every year, which is really impressive, especially for AI data center revenue, which could see an annual increase of up to 80%. And what else did Dr. Lisa Su say? AI investment will not slow down, so there's no need to worry, as some in the market do, about high capital expenditures or whether things will stabilize. He said AI will not stabilize now. By 2030, the data center market will reach $1 trillion with a compound annual growth rate up to 40%. So because this outlook is relatively positive, AMD's stock price saw a significant increase in pre-market trading in the US today. Of course, as for AN's stock price, yesterday it fell below the 20-day moving average, dropping nearly 2.7%. Today, we'll need to watch and see if it can climb back above that monthly moving average. If it can rise above and hold steady, then there's no need to be overly worried. In the short term, there's no need to be too concerned about a potential top forming. If today, during trading or by the close, it manages to get back above the 20-day moving average, then there's nothing to worry about, especially since Su Zhifeng's outlook remains quite positive. So that's the response regarding ND. Let me just briefly add a bit about these two things for everyone. That's a quick supplement on SoftBank and my view on AD Sumo. Finally, let's talk about Oracle. Oracle's debt and leverage are relatively high, which led Barclays Bank to downgrade Oracle's debt rating to underweight today. They even believe that Oracle's current debt-to-equity ratio is as high as 500%. In other words, if we look at Oracle's equity, let's say it's $1 billion, then its debt is as high as $5 billion, which is 5 times more. That means your capital is so little, but your debt is so much. So Barclays thinks that in the future, Oracle's credit rating might be downgraded to nearly BBB-, which is close to junk bond status. They even said so. They even said that by next June or even November, there could be a very serious funding gap. Whether this will actually happen or not, it's still uncertain at this point. It's still uncertain right now. It's just that for Oracle, because of the pressure from this debt issue, it really caused its stock price to drop sharply in the short term, falling all the way down from $350. It kept dropping, and the gap down at the beginning of September, specifically the gap down on September 12th, was because in their Q2 financial report, they mentioned a backlog in their cloud business, with many orders growing 360% year over year, and a backlog of orders. Over $450 billion is a huge amount. This backlog of orders was a positive factor that made the stock surge, rising from $250 to $350. But after the surge, you'll notice with gaps, it's always the same. Sooner or later, they get filled. As long as there's a gap, whether in an index or a stock, almost always, it'll get filled eventually. As long as there's a gap, no matter how high, it will get filled. It's just a question of when, but it will happen. Now, for Oracle, this gap hasn't been filled yet. After it is, we can see what Barclays Bank, or even Michael Burry from The Big Short, think about companies like Meta. No, for Oracle, the problem is that their debt is too high. So, is this level of debt really too high? Can the CEOs of these two major companies come out and clarify things, or maybe address these concerns in their order books or financial reports to ease everyone's doubts? That will determine how the stock price moves going forward. So right now, because of this kind of volatility, you can see that both Meta and Oracle have had relatively weak stock prices lately. It's all because of this situation. So when you talk about this, is it Michael Burry or Barclays? Will their concerns actually come true? In my opinion, will they come true? I think as long as this perpetual motion machine isn't broken for now, these concerns will eventually be digested and resolved. All right, let me say it again. As long as the AI perpetual motion machine, this operating model, or as long as there isn't a chain reaction of disasters and the cycle keeps rolling on, then capital expenditures will keep increasing, revenue will keep increasing, profits will keep increasing, and the customer base will keep growing. NVIDIA's orders will also keep increasing. As long as this cycle doesn't change, then in the market, in the short term, things like debt crises, excessive depreciation, or overestimated earnings, these kinds of tactics. In the end, everything will settle down and get absorbed, because as long as future financial reports, revenue, and cash flow all come in, none of these isolated concerns will actually hold up. These worries simply won't hold up. Why? Because the money is coming in, revenue and profits are coming in. Even if those concerns are valid, as long as the money and profits keep flowing and orders keep coming, no one will worry. So it's a really interesting situation. Right now, because there isn't even more material, even more revenue and profit to dilute these debts or offset the impact of credit rating downgrades or depreciation periods, that's why people start to worry and have doubts. So at the end of the day, it all comes back to fundamentals. If the fundamentals are strong enough, none of these things will really be a concern. But in the short term, these issues can indeed cause stocks like Meta and Oracle to be weaker for a while. So if you're someone who trades in the short term, you need to be a bit careful, because right now, things are still on the weaker side in the short run. But looking at the long term, there still aren't any extremely serious concerns yet. That's the situation for now. Lastly, let's talk about Google and Microsoft. They're still burning through cash, constantly investing a lot of money. For example, in Germany, they invested 5.5 billion euros. Microsoft also invested $10 billion to build a plant in Portugal. Basically, they're just continuing to burn money and keep giving guidance. Of course, the market is worried. If these AI companies are pouring in so much money, will they be able to make it back? Personally, I'm not that pessimistic, because as I've said before, companies like Google and Microsoft keep throwing money at AI development. So you might wonder if they'll ever make that money back, but there's really no need to worry. Why? Because Microsoft and Google aren't actually relying on AI to make their money. Google makes most of its money from things like its search engine, right? Google search engine, and then there's the Android phone, the Android system platform, and especially advertising revenue. That's the biggest part. It's not making money from AI, it's just that now it's expanding its reach, putting more effort into AI development, like making TPUs and other chips and moving toward AI. Plus, it's getting a lot of orders, like from Anthropic. You mentioned that Pig has a lot of orders, probably looking to partner with Google. So Google is really impressive. It's already very strong in its core business, and now in AI, it's also doing great and catching up really fast. Microsoft's the same way. Microsoft's main business isn't AI either. Microsoft invested in OpenAI and got a 27% stake, which is high, and they're making a lot of money from it. But what is Microsoft's main profit source? It's not AI. What is it? Like I mentioned, it's Office 365, or maybe Office 360, and the Windows operating system. Plus, there's Office software and cloud services. These really make up most of Microsoft's profits, so it's not just relying on AI. So its core business, it's already very strong. And in the future, it's just that they want to make their other AI-related side businesses even stronger. So as for Google and Microsoft investing so much money, honestly, among the so-called Magnificent Seven, I think Google, Microsoft, Amazon, and even Meta, these companies are pouring a lot of money into developing AI. But I really don't think there's any need to worry too much, because they can earn that money back. Their cash flow is sufficient and they can make their money back, but for other small and medium-sized companies, that's not always the case. It depends. Everyone will have to keep an eye on things as they develop. As for the US stock market before the opening bell, as we're talking about this, we've managed to keep it within 40 minutes today. Hopefully we can wrap up soon and not take too much of your time. So regarding the pre-market rise in the US stock market, it's mainly because of AMD. Since Su Zhifeng tends to have a positive outlook, AMD's stock price surged 5% in pre-market trading, reaching $250. Micron Technology, IBM, and Bitcoin's Coinbase also went up by about 2%. Additionally, Supermicro Computer, SMCI, saw a modest pre-market increase of 1%, reaching $39. As for ARM, it also did well in pre-market trading, rising by 1%. It seems it wasn't affected by SoftBank selling off its shares. Yesterday's 3% drop had already priced that in. Broadcom also went up by 1%. On the downside, Moderna fell by 2%. Other companies like Zillow, Pfizer, Coca-Cola, and Warner Bros. Aren't really influencing the market trend. Sigh, for stocks with major impact in the US pre-market, they dipped slightly by about 0.8% to 0.6%, so declines weren't significant. Right now, US futures and major tech stocks in pre-market trading are still leading the US stock market in a bullish direction. The market is moving bullishly. As the saying goes, it's a bullish trend. As always, the advice is to sell when prices are high. You just split your positions, and if the price drops back down, you can gradually clear out your holdings along the moving average and slowly build your positions. Then, for short-term trades, you can gradually accumulate your long-term positions. That's basically the approach, as long as, going forward, your individual stocks or the index don't fall below the 50-day moving average on any given day. If it falls below the 50-day moving average, or if the 50-day moving average turns from rising to curving downward, remember to run fast. Get out first, no questions asked. But right now, is that the case? No, not at the moment. The Dow Jones Index is still very strong, and there's a good chance it will hit a new high again soon. That's the situation. The lower it goes, the more bullish the moving averages look. Yesterday, it rose 1.18%. The Philadelphia Semiconductor Index faced pressure and dropped 2.5%, but it's still above the 20-day moving average, consolidating there. As long as the 20-day and 50-day moving averages keep trending upward, according to Granville's 8 rules, it's still a bullish trend for now. Unless this structure changes, there's no need to be overly pessimistic. As for the Dow, it dipped slightly by 0.21% yesterday, but it's still holding above the monthly and quarterly moving averages. Overall, even though there's a lot of noise, like the US government shutting down and reopening, and all the economic data, in this kind of uncertain situation, a lot of economic data hasn't been released. The Federal Reserve has taken a wait-and-see approach with monetary policy. In December, the Fed will likely keep interest rates unchanged. The US dollar and stock market are still fluctuating and consolidating at high levels. When managing positions, stay cautious and pay close attention. The bullish structure is unchanged. But position management should still be your top priority. Alright, that's all the latest information related to the US market that we're sharing with you before the US stock market opens. When class is over, remember to like, subscribe, and share for us. Finally, I wish you all successful trading, and we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.